Okay, so here we go. The market is finally starting to show its true colors. Let's talk about it. Okay, so today I want to revert back to my days as a trader and kind of show you what's going on in the market because the market is starting to feel the pressures. Now, on this channel, we have talked an awful lot about the underlying issues regarding the economy and finances and the markets in general. And so far, the markets have been kind of whistling past the graveyards and they've been kind of ignoring all of these issues that to us, you and me are obvious, but Wall Street has been kind of ignoring them. Well, they can't ignore these issues anymore. The housing market is starting to show really severe cracks. The bond markets are in serious territory. The dollar is under attack. And we also have those other big issues waiting in the wings, like CMBSs, commercial-backed mortgage securities, and those $1 quadrillion of derivatives. That's one of the big time bombs out there that nobody talks about except for here on this channel. But the proof is always in the pudding, right? It's good to have opinions, but what really matters is what is actually going on in the market. So let's take a look at some technicals. Okay, so let's start with the shortest time period on the chart here. This is the 1 month chart of the Dow Jones Industrial Average. And by the way, you can see that as of this recording, and we're about halfway through the trading day right now, the market is down 379 points. Now, during the course of the month here, the market put in a double top here, and I told you this was the current near-term resistance, and we broke it, and we broke it decisively. It tried to have a little pushback yesterday, but now it is starting to crater. Okay, so that was the 1 month chart. So now let's pull back a little bit and let's take a look at the 3 month chart. Okay, now here we see a double top was formed there. It's not exact, but it's good enough. That is a double top. And yes, like we noticed in the 1 month chart, this was near-term resistance. Well, this is actually the next resistance beyond that. And that was also broken. So we have two important support levels that have just been broken. And notice up here, we have a nice rounded A, right? We call that an A. All right, now let's pull back a little bit more. And let's take a look at the 6 month chart. And we see these levels become even more significant. Now, right now, we're approaching another very important support level. Now, if that level does get taken up, the next support level is down here at around 32,006, it looks like. Now, I didn't draw all the lines that I could in the chart because I don't want to confuse you all. I like to keep things as simple as possible because we want to take a look at the big picture. Okay, what is the market actually feeling? Now, what should be happening here, by the way, is somewhere in here, the market should have a pushback. It should have a bounce. That's what happens at support levels. You have pushbacks, you have little rallies. So I would not expect the market to go straight down to this 32,006 area, but that's the direction that it's going. And let's pull back even more. Let's look at the 1 year chart. Okay, now here's the big picture, right? Here are the important support levels. We're at a minor support level right now, but this level right down here, this is the big one. If that gets taken out, the next level here is down here under 29,000. Now, a few things you want to keep in mind here. Remember, technicals are just kind of like pictograms of how the market is feeling right now, the sentiment of the market. And these technicals do work because these technicals are just reflect human emotion. Because remember, the markets are made up of human beings. So when you're trading in the markets, you're not trading stocks or bonds or commodities or cryptos. You're trading people, and people are emotional beings. And you can see the emotions built into the charts. And you can see those three emotions built in the chart. The three emotions that drive the market are fear, complacency, and greed. Of those three emotions, the most powerful one is fear. Stocks can go down a lot faster than they can go up. And another point I want to make is that trading these days are often not done by actual human beings. They're done by computers through algorithms. And algorithms look at the same patterns that we old timers look at, right? Because these patterns work. But when the computers kick in, the selling and the buying can move really, really fast. So I just want to put everyone on notice here that something big could be coming. So make sure you take measures. If you're in the stock market right now with your 401k and your mutual funds and in your own trading account, you might want to start taking, conservative measures. And if you're aggressive, find ways to make money on this market trend. Anyway, so be careful out there. Ed Anderson, live from Minnesota, signing out.
Copy that.